Thanks, Tim, and delighted to be here again. As Tim introduced me, I'm Chief Commercial Officer of PayGroup. And yes, there are some internet glitches, and if it needs to be turned off on video, I'm sure that may be a better thing to do. So my job today is to just take you through our investment highlights, or what I like to call the thematics of why would you invest in us? We're a leading provider of payroll and HCM globally. Mission critical payroll is in every country, every company, and you need to pay your staff and calculate that pay accurately. Our clients trust us because we have that deep compliance domain expertise, and we do it in 41 countries and not just one country. So our expertise really has been built up over the 15, 16 years of our operations. And we know the legislation in each country to make sure that we don't get into any issues. We have a big and growing client base, 2,100 enterprise customers. We were 1,100 about a few weeks ago, and our recent acquisition has really helped us to grow that metric. And I'll take you through a bit of a flavor of who our customers are. We have great, strong organic growth potential, and it's with our direct teams and our partnership program, and I'll touch on that a bit later. I'll also cover our financial metrics. We're a 31 March year-end company. We've just finished our year-end, and I'll be delighted to show you what we've achieved as ARR and our sales metrics, which are two key elements that we track and we report to the market on a regular basis. And every investor wants to know how we're positioned for future growth. I'll also touch on that, but it's all been a culmination of great organic growth, great acquisitions, taking us into FY22 and beyond. Next slide, please. So who is PayGroup? Well, we are a fully compliant payroll solution. We process over 6 million payslip transactions annually. Now, these are mission critical payroll solutions where I'm sure you've read perhaps in the papers on a regular basis about underpayments, even overpayments, and that happens across the globe. So we are compliant in our platform, in our services, and about 3 years ago when we listed, we were doing 400,000 transactions per annum. Now we're up to over 6 million. So we're not only doing it accurately and timely, our growth trajectory is fantastic. We have a scalable platform which does deliver it, and we deliver it using our unified reporting. We deliver it using our great human capital management modules, which not only digitize a company's back office or front office in HR, but also gives them single view of any time being compliant in their payroll and HCM. We are present in more than 40 countries. In fact, our number is 41 at the moment. And at IPO time 3 years ago, we were 18. So the more we've grown, the greater we have been growing our revenues and our client base. And I touched on our client base earlier. We're over 2,100 enterprise customers, and we're industry agnostic. And not one customer represents more than 4% of our ARR. And importantly, we do get recognized by industry bodies, and Gartner is one of the leading ones in our industry. And we have been recognized in the Gartner Multi-Country Payroll Solution Guide. And what that does is it really helps larger organizations look at us from a procurement perspective and tick those boxes because we are in the multi-country guide, we are listed, so all those liability issues go away faster. Next slide, please. So why do clients choose us? Well, we are a very trusted, sticky payroll solution. Because we have local compliance expertise, and clients generally choose us for one country, and then we grow with them across multi-countries, it becomes a very sticky solution. We remain compliant. We mitigate their reputational risk. And once they get our streamlined reporting, they know at a single point in time where each of their staff is, how their payroll is, are they fully compliant, is my staff paid on time, and are my superannuation funds and my taxation benefits lodged correctly with the right authority. So we provide all that in one view, and it is very trustworthy and sticky. We also deeply integrate with our clients. So we don't just leave it at the calculation end. We do the payments for clients. We do the lodgements for clients, and then we feed back into their ERP systems to make sure they get the end-to-end workflow. All the journal entries are passed through their SAP, PeopleSoft, Workday platforms. And then, the other benefit to all this is that we optimize a company's in-house and in-country payroll platform. Many organizations, which may come as a surprise, still work on paper. And if we take the digitization of their payroll and they get to access our platform and look at all their reports, it optimizes how they deliver employee well-being internally, and their HR divisions become more efficient. And all this offering of stickiness has led to our rapid rise and growth in our number of payslips. And I mentioned before, it's 6 million or over 6 million, even in the COVID impacted year, great growth. And that's about 15 multiple growth since IPO. Next slide, please. So who are these great clients? Just a snapshot of a few. And we do work for the corporates, and those corporates are Appen, Westpac, Roche. And we also do work for the workforce management contingent labor organizations, the likes of Michael Page, the likes of Hudson, Bedison Group. And the recent acquisition has opened up a new vertical, which is our third vertical, and that's the franchise space. And I'm sure you've heard of Subways. I'm sure you've heard of laser clinics. So all the great brands, all the multinationals we support, whether it's one headcount or whether it's above 10,000 headcount, whether it's one country or more than 20 countries, which is our largest customer, we can do it all in the same techniques. Next slide, please. With all this great customer base and our deeply trusted solution, we look at what is our growth potential. And we've been adding more geographies. We've been coming from that payroll solution, that whole compliance payroll core. And we've been acquiring and building all the great HCM modules that we have today. And what that allows us to do is when we tuck in new client bases, it allows us opportunity to upsell and cross-sell all these other modules that you see on the right-hand side of your screen, like timesheets, like leave, talent management. And what COVID's taught us is that the way that people work, the way the offices allow employees to come in has also changed. So we've introduced facial recognition into our platform, and that's also tied to temperature checks. So you might be able to, walk to your office, there's a kiosk or an iPad, you look into that, it measures your temperature, it identifies you. If you're within that range of temperature, the doors open. If you're not, the doors remain closed, and you're then asked to, apply for your leave instantly. So all these suite of modules do help our companies and our organizations and our clients take advantage of the growing number of module suites and the growing number of countries that we expand into. And examples of that would be where Westpac joined us in Singapore as a one-country solution a few years ago. Now we do them for 7 countries, including some of the modules like leave and claims, even for their US and UK operations. Thank you. Next slide, please. Our organic growth is then also complemented with what we have created called our Global Partner Program. And our Global Partner Program is where we tie up very deeply integrated with the world's leading companies who do not have a presence in Asia Pacific. Now, PayGroup is in 41 countries, but we're not in Europe, and we're not in the Middle East and North Africa, and we're not in the Americas. So when we tie up with the global giants like Ultimate Kronos Group and CloudPay in UK and Immedis in Europe and Ireland, they sign global deals, but they have no presence in Asia Pacific. So they partner with us, they sign those global contracts, they hand those contracts to us for our 41 countries to deliver. And that Global Partner Program then becomes a very low cost of acquisition for us because we're not the ones going out to get the global clients. These guys are. They're the ones negotiating expensive legal contracts. We're not. And we are doing it at the same rate card that we present to our current clients. So it's a high margin service at a low cost of acquisition. And from a standing start 2 years ago to today, our Global Partner Program contributes about 10% of our ARR. and it's increasing, as you can see there, 140% on prior comparative periods. So great growth in that partnership program. Next slide, please. So just onto our financial metrics. I've talked a lot about our growth. So we've released guidance to the market in mid-March that we were going to meet at least 20.5 million ARR. As we ended our year and as we completed an acquisition on the 31st of March, we've given re-guidance to the market that we're going to be hitting at least 27 million ARR. That's significant growth from last year, which was 17.8, and prior year to that was 8.4. So exponential growth from organic and acquisitions. But the underpinning of that growth really is our organic sales force. All of FY20, which is at the end of March 2020, we signed $5.5 million in contracts for that year. In FY21, as at 31 March 2021, even in the COVID impacted year, we've signed 13 million at least in terms of dollar value of contracts. And that, increase surprises people, but for us, it's actually what we expected as a digitization coming out of COVID. People want to get away from paper. People who are spread across the world in multiple countries are unable to, task their HR managers or their finance teams to make payments across multiple countries, sitting at home using their banking tokens. So the trajectory of our sales really has been quite tremendous during the FY21 year. And the leading indicator for us is that those sales will continue to grow. We have the strongest ever pipeline, and entering a new year with 27 million ARR with a growing list of customers is a great indicator to investors how FY22 is going to be looking. Next slide, please. And our future outlook, well, we've got our core payroll solution. That is going to be our core compliance, and that's where people trust us. But using that, we then organically grow, not just new clients, but the upsell and cross-sell into our existing client base of all the HCM modules that we've built or acquired. And then we leverage our partnership program to complement our organic growth, to bring in more and more new clients into our ecosystem, where we can then cross-sell and upsell more services. With all that and trusted payroll and trusted HCM platforms, we have also been doing a lot of payments and moving into employee well-being. And some of you may have heard about products and services like on-demand pay. You might have heard about invoice factoring to the workforce management market. You would have heard about all these employee well-being products and services out there in single countries. So PayGroup is actually taking a very serious stance into the monetization and the payments sector to not only help companies with their payroll, but to help monetize them, to help give them employee well-being products like on-demand pay. And then at the final core of it is our automation projects. And we recently hired one of the leading innovators in payroll globally. He recently left ADP. He was their Chief Innovation Officer. He's joined PayGroup. His name is Jerome Gouvernel. And with the help of Jerome, PayGroup will continue to automate and get into more robotics, machine-based learning, AI, to not only give efficiencies to us, but our client base too. Thanks, Tim. I'll finish on the last slide.
Thanks, Sachin. A couple of questions here. There's a bit of a land grab, it appears, to be going on in this space. PayGroup is particularly active with M&A and in particular with acquisitions. So do you see any other kind of payroll verticals the company could move towards that you may be interested in acquiring?
Well, our research shows, Tim, that the one that's really remaining at the moment must be the gig economy. We've captured the corporates, we've got the workforce management, we've now got the franchise, and the last bit is that gig element. And there are some legislative nuances and challenges we read about at the moment in gig economy workers. Uber, Delivery Hero, Grab, are they really your employees? Are they contractors? So for us, our core is payroll. And in some of the acquisitions we've done, we've actually simply bought the one we did in November last year, Payroll HQ, a great growing payroll services business in Australia. In fact, the fastest growing in Australia. We tucked that business in and not only got a customer base, but one of the leading salespeople in payroll in Australia and New Zealand, Ross Heron. So those acquisitions are quite important to us and help us to grow our ARR. And as I mentioned, we can then upsell and cross-sell our modules that we already have.
And so when you acquire these new businesses like IWS, I beg your pardon. So can you kind of elaborate on the opportunity to kind of cross-sell? You cross-sell your solutions to that new acquisition and vice versa. Is that how it works?
Yeah, it is. And if you look at IWS today, they tackle the franchise sector. They do the crust pizza, Subway stores, laser clinics. So they have payroll, they have rostering, the core to franchise. But PayGroup has onboarding. PayGroup has, claims and expenses. So by plugging in onboarding, even just in that franchise sector, provides an extra module where the franchisee or the master franchisor or the fund that owns these franchises can just take on more modules and make themselves more compliant, plus also give the franchisee owners more access to systems which make them more efficient. So the whole point of acquisitions for us has to meet, it's got to be financially accretive. It's got to be in our core payroll space. It's got to offer that upsell, cross-sell opportunity. And in IWS's case, it ticks all those boxes, plus also provides us a very positive accretion on our cash flow.
And there's some questions here that have just come in actually around profitability. You've obviously got high growth. When is or where is the pathway to profitability?
So we're currently focused on, I'm sure you've seen the metrics of ARR and total contract signings. We continue to remain focused on our underlying profit, and we will report that to the market. What we will continue to also do, and that's been very much part of our cap raise recently, is to invest in our technologies, is to harmonize our technologies, and Jerome is a big element of that. And we will continue to look at acquisition opportunities. So we will have one-off expenses, but they will be incurred to grow the business, to grow the revenue. So we are focused on underlying profitability at all times.
Yeah, there was a question there around you raised 16 million in cash. Some of that was part of the acquisition for IWS. So the rest of the cash potentially for technology and things like that?
Yeah, it is for technology enhancement, especially to support Jerome and his roadmap over the next 2 years. But it is also importantly to continue to grow our sales enablement, not just only in Australia, but in Asia Pacific and perhaps some new geographies that we'll expand into. So it's a broad use of funds, and 8.4 million out of the 15 million that we raised is for the cash portion of IWS.